What would you do with an extra £1,000? You could spend it, save it, or invest it to create passive income that pays you every single month. In this video, I'll walk you through exactly how to invest £1,000 in 2025 to start building passive income, even if you're a total beginner. This is about smart, strategic decisions. No hype, no get-rich-quick nonsense. And if you're new here, welcome to Alpha Wealth Mastery, the channel where we simplify wealth building and teach you how to create income that works for you. It's not the other way around. If that sounds like your kind of content, hit that subscribe button, give this video a like, and let's get straight into it. So here's the plan. We're going to split that £1,000 into 3 parts, so you can build a diversified, realistic passive income portfolio. We'll cover a low-risk income stream for stability, a moderate risk option with higher returns, and a longer-term play that builds over time. By the end, you'll have a complete strategy, and if you follow it consistently, this can absolutely grow into something powerful. Let's start with the first category: low-risk, stable passive income. For this, we're talking about high-yield savings platforms and crypto interest accounts. You take a portion of your £1,000, let's say £300, and park it somewhere that gives you steady returns with minimal effort. In the traditional world, you might look at premium savings accounts like those from Chase UK, Zopa, or Nationwide, some offering around 4 to 5% annual interest right now. But if you're open to crypto platforms like Nexo or Crypto.com, offer up to 8 to 10% interest on stablecoins like USDC. This is passive in the truest sense. You deposit your money, and it starts working immediately. With £300 earning 8% annually, you're making £24 a year. It's not life-changing, but it's stable, secure, and a smart place to park a portion of your cash. The key here is liquidity. You want some money in an account you can access easily while still earning. At Alpha Wealth Mastery, we always recommend having a mix of safety and growth, and this gives you both. Next up, the second category: moderate risk, moderate return. Here's where dividend stocks and ETFs come in. Let's allocate £500 of the £1,000 here. You can use platforms like Freetrade, Trading 212, or eToro to invest in UK or US dividend-paying stocks, or ETFs that pay you quarterly or monthly income. A great example is the Vanguard FTSE All-World High Dividend Yield ETF, ticker symbol BHYD. This ETF spreads your investment across hundreds of dividend-paying companies around the world. Historically, it pays around 3.5 to 4.5% annually. You could also invest in individual UK stocks like Legal & General, National Grid, or Unilever, all known for consistent dividend payouts. With £500 invested at a 4% average yield, you'd earn about £20 per year. But unlike savings, these assets can also grow in value over time, giving you capital growth on top of income. And remember, if you're in the UK, you can invest using a stocks and shares ISA, meaning your dividends and capital gains are tax-free. That's a massive win. This part of the portfolio is all about balance. You're getting exposure to the market, earning regular income, and building a long-term base for financial freedom. The third part of your portfolio, the final £200, is for growth-based, higher-risk passive income. Here, we're talking about digital assets, online tools, or small bets that could pay off longer term. Let's explore 3 possibilities. Option 1. Use the £200 to build a faceless YouTube automation channel. You can pay for a simple voiceover tool like 11 Labs, some royalty-free footage, and generate content in a niche you understand, like personal finance, tech, or productivity. Over time, this could start earning through YouTube ads or affiliate links, even while you sleep. Option 2. Invest in a digital product, like an ebook or template, and sell it on platforms like Gumroad or Etsy. £200 could cover design, marketing, and setup. And if the product delivers value, it can sell again and again with no extra effort. Option 3. Put the money into a DeFi yield farm, where returns can be significantly higher, often 10%, minus 20% plus, but the risks are much higher too. This final 20% of your £1,000 portfolio is about calculated risk, small bets, high potential. You're not risking the core of your portfolio, but you're giving yourself upside. And remember, this isn't about throwing darts at the wall. Do your research, Test things out. Measure your results. Now let's zoom out. Here's what your £1,000 passive income plan looks like. £300 in stable, low-risk interest accounts or savings, £500 in dividend stocks or ETFs for moderate returns and long-term growth, £200 in higher risk, higher reward digital or crypto opportunities. This gives you stability, income growth, and upside potential, all working together passively to move you closer to financial freedom. And here's the truth. It's not about just this one £1,000 investment. It's about the habit. If you repeat this strategy every few months or every year, compounding kicks in. Before long, you've built a portfolio that generates meaningful monthly income, completely passively. At Alpha Wealth Mastery, we believe that consistency beats intensity. You don't need £50,000 to start. You need a system, discipline, and the right mindset. If you found this video helpful, hit the like button. It tells YouTube this is content worth sharing. And be sure to subscribe to Alpha Wealth Mastery if you want more real-world strategies for building wealth, creating income, and retiring early. Drop a comment below. What would you do with your £1,000? Would you go safe and steady or bet on something bigger? Thanks for watching. I'm rooting for you. This is Alpha Wealth Mastery. I'll see you in the next video.